Hello everyone, welcome to Akira's Academy of Accounting and Finance, and today we have reached to our fourth chapter, and that also named as Recording of Transactions Part 2. Okay, now in the third chapter we discussed how the transactions are identified based on the source documents. We record the transaction, we pass journal entries. After passing the journal entries, we post them into ledger. That is called ledger posting. Okay, now these journal entries and ledger postings, like making just one book, is possible in small organizations. Now you imagine there are organizations, there are entities which are dealing in numerous transactions with single dealer so many times. Okay, like they are purchasing from that dealer, they are returning them to that dealer, they are selling to their customers, and that goes on and forth. Okay, now passing all these entries in the journal make it so cumbersome, right? What they do, they prepare separate books for it. And in this chapter, we are going to deal with it, how the books are being prepared. Okay, so earlier what we were doing, passing journal entries and then posting it. Now what we will do, okay, now what we will do, there are certain transactions which are dealt only in cash. Okay, only and only cash transactions. For that we will prepare cash book. Okay, fine. So all the transactions which are being dealt in cash, cash receipts, cash payment, for that we are going to prepare cash book. Second, now there will be credit transactions, right? Credit transaction, like the payment still not made, or we have still not received something, the money, so they will be called credit transactions, right? Now these credit transactions, for that, transaction related to goods, transactions related to goods, for that we are going to prepare different books. Like I said, we are like goods are being categorized into 5 categories. Okay, similarly books that we are going to be prepared are purchase book, purchase return book, sales book, and sales return book. There is bills receivable, bills payable book. We are not going to deal with it right now, so don't go into that. We are going to deal with these books. Okay, so credit, goods purchased on cash, cash book. Okay, we have purchased the goods on cash. We will record it in our cash book. But goods which are being purchased or sold on credit, for those transactions we are going to record them in purchase book, purchase return, sales book, and sales return book. And all other transactions we will pass journal entries, which is called journal proper. Okay, like if you are buying a furniture, and furniture you're not buying on cash, you're buying it on credit, where it will be recorded. It can't come into cash book. Furniture, that is not our goods, we are not dealing with this, it is our asset. Okay, so it will not come under this category. For that we are going to record it. We have to pass journal entries in journal proper. Okay, charging of depreciation, considering the bad debts, all these things comes in journal proper, right? Now we will talk about cash book. What is cash book? Okay, cash transaction, what will happen? We will either receive money or we will either pay. Okay, so there will be a receipt and there will be a payment of the transaction that we are dealing in. So we will prepare cash book, not going to pass journal entries, and no journal entries, and no ledger posting. This cash book is going to serve the purpose of both. Like journal entries and ledger posting, we are not supposed to prepare a separate ledger account of cash. Okay, we are dealing with cash book, everything is being covered in it, right? Now, cash book, there are different two types. Okay, one is single column and next is double column. Okay, this we will deal it later. Single column cash book. Single column cash book, only cash transactions. Like we are purchasing goods on cash, we are selling something on cash, we are the owner brought cash into the business, we are buying anything, furniture or asset, that cash, we are buying stationery, we are getting rent, insurance premium, all these things comes in the single column cash book. How it is being prepared, let me show you the pro forma. It is similar like the way we do the ledger posting. Okay, debit, credit. Debit side, cash received. Credit side, cash paid. The uh, rules of debit and credit. Debit what comes in, credit what goes out. Okay, the real account. Or the second rule, modern approach. Debit when the asset increase, cash is an asset. It increases, debit it. When the cash decreases, credit it. The same rules everywhere is being followed. Here we will write the date. Here we will write receipt, amount rupees, same date, payments, amount rupees. Okay, this is how, like this only we prepared our ledger accounts, right? In the previous chapter, the pro forma is same. We are going to write the all the receipt entries on the left side, all the payment entries on the credit side. Let us deal with an example how we will pass the entries in it. Okay. Okay, now we are going to deal with a simple example just to let you know how the transactions are being recorded in a single column cash book. So I have prepared cash book over here and I am going to do ledger posting of those transactions over here. Ledger accounts, I'm going to prepare it over here. I know I have prepared a few ledger accounts. I was not having much space. But okay, we just to give you an idea how we are going to do with the transactions. Okay, now usually the cash books are being maintained monthly. On the monthly basis, they deal with all the transactions. They carry forward that balance to the next month. So let's say October 1st, balance of previous month was 50,000. I was having this much amount of cash in hand. Okay. Now I sold goods for cash worth rupees 20,000 on 5th, sales account 20,000. To balance brought down to sales account 20,000. Okay, now cash book, I have made an entry. I have to record it in my sales book. Okay, so here it will be sales account. Journal entry, cash come in. Okay, so cash account debit to sales account. Sales account is being credited and it has been on 5th of October by cash. There's a cash sales of rupees 20,000. Okay, now I paid rent. Okay, payment of rent. Rent is an expense. Okay, debit all expenses and losses, and we are giving cash. Cash is going out, so rent account debit to cash account. Okay, on 10th of October, I paid the rent. So by rent account, rent I paid, let's say 10,000. Okay. Now here I will prepare ledger account of rent. Okay. Rent account is being debited October 10. I paid cash, so cash account. The details, it's the account. In that account, we have to write the details with what happened. Okay. So 10,000, right? Now I purchased furniture worth rupees 25,000 on 15th of October. Furniture, I am going to all the time tell you the rules of debit and credit. Let's consider here the modern approach. The furniture is an asset. My asset increases. At the same time, cash is also my asset. Cash decreases. Furniture account debit to cash account. So furniture account, I said 25,000, right? So furniture account on the credits debit side, I will write to cash account 25,000. Okay, now if I have received some kind of commission from something, okay, commission income, we will credit it, and we have received cash is an asset, we will debit it. Okay, now let's say on 18th I received a commission worth rupees 8,000. Okay, here I'll prepare October 18th. Okay, now let's say I have paid the electricity bill. Okay, electricity bill is an expense debit. Okay, and cash is going out. Cash is an asset is reducing. So what will be the journal entry? Electricity bill expense account debit to cash account. So cash account on the by electricity bill account, let's say 5,000, and here I'll prepare ledger account of electricity bill October 20th to cash account. I paid 5,000 for electricity bill. Okay, now I have thought of depositing rupees 50, 70, 78, 78 and 25, 10, 35, 35, 40. Okay, I have thought of depositing rupees 10,000 in bank. Okay, so bank asset increases, debited. Cash is asset, cash decreases, credited. So bank account, I am depositing on 29th by bank account 10,000 October 29th to cash account 10,000. Okay, my month got over. I will total all the things. So here it is 78,000. 31st of October, how much balance I am going to carry down? 20, 30, 40, 50. 28,000. I will carry this balance to the next month, that is in the month of November. To balance brought down is 28,000. So this is how we prepare single column cash book. Easy. Now we have to post the transaction in respective ledger accounts, but there is no need to prepare cash account, as cash book serves the purpose of both journal as well as ledger. And this is the way we prepare single column cash book. Now we will discuss about double column cash book. The next topic that we are going to discuss about is double column cash book. Now in the previous example, as we see how the cash transactions are being recorded in the cash book. Okay, we don't prepare a separate journal, we don't pass a separate journal entry, we itself prepare a cash book wherein all the receipts we debited, all the payments we credited. Now in the businesses, not only cash transactions are happening, right? There are bank transactions. Like nowadays, when we are making payment to somebody, we use Google Pay, Paytm, all these things. So businesses deal with numerous bank transactions. So what they do, they open a current account in the bank. Now there is certain facilities like current account, savings account, and fixed deposit account being provided by the bank. But this is for depositing money wherein you get an interest. Okay, current account, here you won't get interest, the business person won't get interest. In fact, they are being charged certain amount, that is called incidental charges, because the bank is providing this facility to the business person. Now when the business person goes to the bank, opens a current account, the bank give them a checkbook, right? Now what is a checkbook? It is a type of a form, a kind of a form which says that if this particular person, the business person, wants to pay somebody money from his bank, then they can issue that particular form. The bank will pay money to that particular person. This is a kind of a services. Okay, so they give this form which mentions the date, to whom they are supposed to pay. There's one more term called bearer. I will explain you that. Amount in words they have to mention, and here they have to mention it in a numerical number, right? So let's say that I am a business person, I have to pay Miss Akriti 20,000 rupees. Okay, and here I will write it in words, here I will write it in numbers, and I will give to the I'll give to Miss Akriti. Miss Akriti will go to the bank. The bank will give Miss Akriti 20,000 rupees. Okay. Now, if Miss Akriti is not going in person, she asks somebody else, employee working in the in that business. She give to that check to that person. So, who is holding the check? That person will get the amount. That is the bearer. Bearer means the one who is holding this check, the one who is having that check. To that person, the bank will give money, 20,000 rupees. Now, there are different forms, right? If I miss cross it, okay, if I cross it, that the strike it off the name bearer, then that becomes an order check. What is an order check? I am ordering that this amount should be paid only to Miss Akriti. If she comes, then only that payment is to be done, nobody else, not to the bearer. Okay. Now there are certain different types, like this. If I make this line, it become a cross check. Now when I cross the check, that means the person standing in front of you on the desk, you are not supposed to pay to that person. If that person comes with a check, you are supposed to pay this check, you are supposed to make the payment through the bank. From my bank to that person's bank account, you are going to make the payment. Okay, here I'll write account pay only. Account pay only to that particular person. You are supposed to deposit money in their bank. Okay, now if at all, if there are certain times, like if I write here SBI Bangalore. Okay, so in that particular, to Miss Akriti's SBI account, which is in Bangalore, that particular branch only, you are supposed to make the payment. Okay, this is called crossed check. Now, if this is not there, okay, if this is not there, pay Miss Akriti. Now, if Miss Akriti wants to transfer the check to somebody, and if nothing has been mentioned over here or here, okay, then she can transfer it if it is an account, if account payee is not mentioned. If she wants to endorse it, okay, when there is an order check, when I say the bearer has been striked off. Okay, so that becomes an order check. Now if she wants to give it to somebody, what she will do, she will endorse it, she will write that person's name and sign it. The bank will give that amount of money to that particular person. So this we discussed about the different forms of check, how the types and forms of check are there, right? Now there are numerous transactions happening in the bank. So what a business person will do, business person will prepare, like the way we prepared a cash book, a separate column we will maintain for bank transaction. Everything else will be the same, like uh, debit, credit, year, date, receipts, ledger folio number, cash in hand, and cash at bank. So it becomes easy how which transactions are happening in the bank, what is the bank balance, how much it is moving, if we record it in like that way. So when we record it like that way, it becomes double column cash book, right? Everything will be same, date, like how we receive money, we debit it, how we pay money in cash, we credit it. Similarly, if certain amount is coming in the form of a check, we will debit it. Certain amount going in the form of a check to somebody, we are issuing a check, we will credit it. Everything else will remain the same. And at the end, we will balance this amount. Okay. Now, at times, like in the previous example, we discussed, there was certain amount we are depositing in the bank. So the cash is going out and the money is coming into the bank. Bank asset increases, cash asset reduces. What we will do? What will be the journal entry? Bank account debit to cash account. So that amount will be, we will debit it, the amount which we are depositing in the bank. Let's say 20,000 we are depositing in the bank. So that bank account will be debited and the cash is going out, cash account is credited. And this particular entry is called contra entry. Contra entry, we are not supposed to prepare, like we prepared separate ledger accounts for everything. When there is a C written, that means it is a contra entry between cash and bank. We are not supposed to prepare any ledger account. Likewise, if I want to take out certain cash from the bank, okay, for certain use, so that also become a contra entry. Let's say I take out 10,000 rupees from the bank, so cash comes into my hand. Similarly, 10,000 goes out from the bank, so this is also becomes contra entry, right? Now all the transaction done, we will make a balance, like how we prepared a balance. What happened in cash, there's always a debit balance. Debit balance means what? Debit side will always be more as compared to the credit side, because cash will always be more. Like if I'm having 1,000 rupees, I can't give 1,100 to anybody, right? I can at the max give 1,000 rupees. So if here it is 40,000, here it was 35,000. So 5,000 is my debit balance in cash. Okay. But in bank, what happens? The bank provides you an overdraft facility. Overdraft means you can take out additional amount of money from the bank. Obviously, they are going to charge you for that. But this is the facility that is being provided, that up to that much limit, you can take out more money. Like I said, here it is 50,000. Okay. Here it could be 48,000. So 2,000 is the credit balance, and that is considered as an overdraft facility being provided by the bank. Okay, this is discussed. You understood this thing. The next thing is, in this, what happens at times, somebody is giving me money, right? If somebody is issuing a check to me, I received the check, but I have not deposited the check on the same day. I am tired and don't want to go to the bank. I thought of, okay, I'll deposit the check on the very next day. Now, when I received the check, what entry I will pass, because my bank account is not increasing. So for that, we will consider it as if the cash has been received. So it will be recorded in the cash column. Okay, in the cash column, we will record that amount. When we deposit that amount in the bank, then we credit the cash column and debit the bank column, right? Now, at times, this also happens when when I'm receiving check from somebody, I deposited in the bank, but that person doesn't have a sufficient balance. Okay, what happened? This is called dishonored. Okay, dishonored means check has been dishonored. That means that person is not having sufficient balance, and that is why the bank is not crediting that amount in my particular account. Okay, so the check has been dishonored. When the check dishonored, earlier I passed an entry that I received an amount of rupees 20,000, right, from somebody. So I debited my bank account. But if the check gets dishonored, what I will do? I will credit it with the same amount. That means I will reverse the entry. Okay. These topics we are going to deal it in an example, right? We will go through an example. Okay, let's take an example. Let's say there is certain cash balance and bank balance already with me for September 1st to balance brought down. There's a certain amount, 50,000 and 70,000. This balance I already get it down from the previous month. 50,000 and 70,000 is the balance. Let's say I purchase goods by making a cash payment. What will be the entry? Purchase account debit to cash account. So let's make a purchase account. Okay. On September 3rd, I purchased to cash worth rupees 5,000, and cash decreases by purchase account 5,000. Okay. Next, I purchased a machinery worth rupees 10,000 by making a check payment. Okay. I made a payment through check. My purchase machinery asset increases, machinery account debit. Made a payment through check, bank balance decreases, so bank account will be credited. So machinery account, I prepared another ledger account, machinery account debit, September 6th to bank account worth rupees 10,000, and similarly my bank balance will reduce by machinery account, it will reduce by 10,000, right? Now I purchased stationery worth rupees 8,000 by making a check payment. So I will open a stationery account. Stationery is my expense. I made a payment through check worth rupees 8,000. Okay, so my bank balance reduces. Bank balance reduces, asset reduces, we will credit it. Stationery expense increase, debit all expenses and losses, expense increase, we will debit it. So on September 8th to bank account 8,000, similarly by stationery account 8,000. Okay, now I received a rent. Okay, now I received a rent. Rent is my income. I received it in the form of a cash. My cash balance increases. Rent is an income credit. Cash increases, cash asset debit. Okay, so cash account debit to rent account. Let's say on 15th I received a rent to rent account by 10,000. Here I'll prepare a rent account. It's my income on September 15th by cash account 10,000, right? Okay. Okay. The next entry, let's say I received a payment from somebody in check, and I am depositing the check on the very same day, right? So let's say Mr. Rohan give me the money. So I'll prepare Rohan's account. He is giving me money. Okay, he's giving me money. My bank balance increases. Bank is an asset, increases. Bank account debit. Okay, Mr. Rohan's account will be credited on 20th. Let's say to Rohan account. He give me, let's say, 15,000, and Rohan's account will be September 20th by bank account 15,000. Okay. Now I need certain more cash. I took out money from the bank. Okay. So here what happens? Cash increases, asset increases, debit what comes in. Bank, money is going out from the bank. The bank is an asset which decreases. So cash account will be debited to bank account. Cash is coming from the bank. How much it is coming? Let's say 8,000, right? And that amount reduces from the bank 25th by cash account 8,000. What we will do? We are not going to make any ledger accounts. Here we will write C. That means it's a contra entry. For that we are supposed to write C, so that there is no need to prepare any ledger accounts, right? Now let's say I paid the electricity bill for the month, and it amounts to rupees 8,000. No, 8,000 I have repeated again. So let's say it is 7,000. I am paying the electricity bill. Electricity bill is my expense. Okay, electricity bill, I am making a payment by check, right? So electricity bill account will be debited. It's an expense. Expense increases. Debit the expenses. Payment, cash, check, it's bank. The asset decreases. Credited. Okay, electricity bill, I am paying through check to bank account 7,000. Okay, similarly here I will write by electricity bill account 7,000. Okay, and then I deposited 5,000 in my bank. Again, a contra entry. I'm depositing money in the bank. The bank balance will increase. Okay, bank account will be debited. Money is going, cash is going out. Asset is reducing. So cash account will be credited on, let's say, 30th of September, right? So bank account debit to cash account. How much I said? Let's say 5,000. Okay, this is a contra entry. We'll write C, and then we'll take out the balance. How much is the balance? Here it is 50, 10, 60 and 68,000 by balance carried down. 68 minus 10 is 58,000, right? Here it is 70, 10, 80, 90,000 and 10, 8, 8, 20, 16, 26, 26 and 7, 33. 33 minus 90 is 57,000, right? So this is the balance which I will carry forward to the next month. So my October 1st to balance brought down will be 58,057,000, right? So now you understood what is double column cash book, how we record the transaction. It is simple. How we recorded single column cash book, same way we are recording. There's just one more column, that is of bank, how the bank transactions are being recorded. The next topic we are going to discuss about is petty cash book.
Till now, we studied how to prepare and maintain a cash book. Single column cash book, double column cash book. Any cash transaction occurring in the organization recorded in the cash book. But there are multiple small cash transactions are also occurring in the organization. Like they have to pay cartage expenses, cartage from one point to another point. If they are loading certain things or unloading certain things, they have to pay that cartage expenses. There are conveyance expenses. There is a postage. If you are delivering, that post expenses you have to give. There are telephone charges they have to pay, stationery items they have to pay. So there are miscellaneous small transactions that are occurring in an organization. Now, if these small expenses, petty expenses, if they start recording in the cash book becomes really bulky and it's cumbersome for the cashier to maintain all these small transactions. So, what an organization do? They appoint another cashier. Okay, what he will be called petty cashier. Now, he works as an assistant. Let's say what the petty cashier will do, cashier gave him money. With that money, he will spend on those small expenses. Okay. When that expenses after a point of time, like on a monthly basis or a weekly basis or a fortnightly basis, the main cashier will give some amount to the petty cashier. That small amount, okay, may it be 5,000, may it be 2,000, may it be 3,000, whatever the main cashier will give amount to the petty cashier. With that amount, the petty cashier will spend on the petty expenses, small expenses, and that amount is called what? Impressed amount. Okay. And the whole system, the way, the process with which it is working, it is called an impressed system. Okay, so here the main cashier is relieved. He is not supposed to maintain the all these transactions in the main cash book. He will give a small amount based on the requirement to the petty cashier. When after a week, let's say that significant amount is spent on small expenses, petty expenses, he will again demand. He will again ask for that balance amount. Let's say he's paying 3,000. The main cashier is paying 3,000. He has spent almost 2,500 within a week. So the balance remaining with him is 500. When the week gets over, again the main cashier will give him a 2,500 of amount. Okay. Like that wise, the main cashier will give a certain amount, the petty cashier will spend it, and this where the petty cashier will record all these things in petty cash book. Petty cash book. So now we are going to study how to prepare and maintain a petty cash book. Now, this is how the petty cash book will look like. Debit side and credit side. Debit side, amount received. Credit side, amount paid. Same. But here, what will be the difference? Here, only one time the petty cashier is going to receive the amount. Okay. Here, only one time. So, this is the debit side and amount paid. This whole is the credit side of the petty cash book. Okay. Now, here, whatever amount he will receive, he will record it over here. And on what he is spending the money, cartage, conveyance, postage, stationery, telephone and telegram, and if any other things like refreshments, like printout, Xerox, whatever, miscellaneous. It will be covered under miscellaneous. Okay. So this will become the debit side wherein he whatever amount he received, he will record it over here. And this is the credit side. Credit what goes out, the payment made. This is where the payment is to be made. So the first column will be amount received. Here, the date will be written, let's say 2024 October. Okay, this is the 24 October. For the October month, he has prepared a petty cash book. Here is the particulars. That means it will record the details, the explanation, on what particular things they have spent money. Okay, so here the details will come. The voucher number will be the same for receipt and payment. Okay, because mostly he will receive the amount from the main cashier, and that time a voucher, one single voucher will be prepared, and he is making a payment based on the invoices or whatever, and he will prepare a voucher. That voucher number will be written over here. Amount paid, whatever amount he's paying, let's say for cartage he's paying 50 rupees, so he'll record it. Let's say, let's take an example, he received 3000 rupees. Okay, date column October 24th, he received 3000 rupees. Okay, then on 5th of October, he paid 50 rupees for cartage. Cartage, 50 rupees. Okay. Then on 6th, refreshments. Okay. They bring tea or coffee. Okay. They drink tea or coffee. Refreshment, there is no particular for column for a refreshment. So it will come under miscellaneous, let's say 100 rupees. Here they will write amount paid 100 rupees. Then on 7th, there is a postage expense. Okay, they delivered something for rupees 85. So they write it over here 85. Right. Again, let's say stationery. On 8th, they purchased, let's say, erasers plus pen, whatever, miscellaneous erasers, pens, let's say of rupees 115. Okay, so here they will write 115 stationery amount. Like that wise, there will be certain 40 rupees again of cartage, conveyance rupees 30 rupees, postage 20 rupees, stationery 25 rupees. They will record all these things in the books. Okay, now after recording all these things, when the month gets over, they will make a total of all these things. Like here it's 100, telephone and telegram is 160, this is 140, 105, 30 and 90. They will add on this amount. Okay, now let's say, I'm just giving an example, let's say there are other expenses, and after adding all these expenses, the total amount they have paid is 2300. Okay, the total amount paid is 2300. Now what will be the end, what will they will carry down this balance at the end of 31st. Okay, is 2300. So on 31st, balance carried down will be how much? 700. 700 is the balance remaining, 3000 amount received, 2300 is amount spent, so balance carried down will be 700, and this balance brought down on November 1st will be, balance brought down will be 700. Okay, again the main cashier will pay 2300, so this will be cash received. Okay, like that wise the petty cash book will be maintained. Okay, now this petty cash book, we have to prepare a petty cash account. Okay, now likewise, we prepare ledger accounts for each and everything. Similarly, these ledger accounts will be prepared. The cartage account, conveyance account, postage account, stationery account, telephone and telegram account, all these miscellaneous expenses account, all these ledger accounts will be prepared. So they will prepare one petty cash account, and the way we post it in the ledger, similarly we are going to post it in the petty cash account, like all the details, date, particulars, JF, amount, rupees, same way. Okay, now this petty cash account, what will be the first entry? Okay, what will be the first entry? First entry is cash is received. Okay, now when cash is received, what we will pass the entry? Petty cash for what they have received for petty cash. Petty cash amount is received. So petty cash account is debited. And cash is going out to where? To the petty cash. Okay, so petty cash account debit to cash account. So petty cash account on the debit side, we will write to cash account 3,000. Okay. Now we received at the end of the month, all the expenses are incurred. What we will write on the credit side of petty cash account? Sundries as per petty cash book. Okay, sundries means all these small things we have added on. It is 2,300 at the end of the month, like October 31st, by sundries as per petty cash book. How much it is? 2,300. Similarly, we will prepare each and every account, cartage account, conveyance account, postage account, all these ledger accounts will be prepared. Okay, and these all expenses will be carried forward to the next month, and at the end of the year, these expenses will be carried forward to the profit and loss account. Right now, what is again 31st, what is the balance? By balance carried down is 700, 3,000 done. And on November 1st, to balance brought down 700, and on November 1st they will receive the petty cash amount from the main cashier. So again, to cash account 2,300. Okay, so this is how again this entry will be coming: petty cash account debit to cash account, this time 2,300. 700 is the balance already remaining with the petty cashier, so the cashier will give 2,300. Okay, understood? This is known as an impressed amount, and this is whole system is considered as an impressed system. Now there are benefits, obviously, like when we think all these things are being done, so the activities they become so less. The main cashier does not have to maintain the books, and we have studied the materiality concept. Okay, in that materiality concept also, like whatever is material that is needed to be recorded in the books. Okay, so these are small petty expenses, they will be recorded, and the major amount, like how much they are giving to the petty cash account, that will come in the cash book, right? Similarly, whenever there is a division of work, okay, whenever, so it what it becomes, it become more simplified. Okay, the activities become more simplified. Moreover, okay, if the whole amount is being given to only one person, he can jumble it up, he can misuse it. Okay, so when this amount is being divided, when the payment is being done to somebody else who is being allowed this work, then these activities will also reduce. Okay, so this is how we are going to prepare a petty cash book. This is how we are going to record it in the petty cash account. We will prepare a cartage, conveyance, all these accounts. and this is how it will be maintained. Hope you got this petty cash book. The next we are going to discuss about the other special journal books, that is purchase return, sales return book. Thank you.